Thank you for joining me this Friday, the 1st of September, and happy spring. I'm Grady, market analyst with Bell Direct, and this is the weekly market update. We are very close to the end of reporting season for August 2023. As of the 31st of August, 348 companies have reported, with 106 beating expectations, 146 meeting expectations, and 96 missing expectations. There have been 47 companies upgraded by brokers, while 41 have been downgraded. Some of the big names who have sparked rating changes include Star Entertainment, which has been upgraded to a buy, Flight Centre to a buy, and Brambles to a downgrade. Let's dive into some of the big names that reported this week that prompted sharp investor and broker reactions. While some retailers have surprised this reporting season, City Chic, ASX, CCX fell out of favour with investors on Wednesday after releasing FY23 results. Over the last financial year, City Chic reported global sales fell 17% on FY22 to $268.4 million. Active customers dropped 12% to 0.97 million. Global traffic fell 16%, and the company reported a loss of $45 million. There were some positives in the report though, including inventory falling 73% on FY22 to $53.8 million, which was a factor the company had to address amid criticism over its unhealthy inventory level over FY22. And the company's net cash rose 273% to $10.9 million. FY24 may see a turnaround for City Chic though, as the company has completed its strategic review, which has identified a significant market opportunity in the ANZ and USA regions. Travel stocks have had an excellent run over the last financial year, so the sell-offs this week experienced were most likely due to investors taking profits as travel demand outlook eases heading into FY24. Flight Centre, ASX FLT results for FY23 were very impressive, given the company felt the full impact from the very start of COVID-19. Conditions improved in FY23 as travel demand accelerated, which saw Flight Centre report underlying EBITDA of $302 million. Profit before tax around 4% ahead of consensus expectations at $106 million. Total transaction value up 112% to $22 billion, which is the second strongest result achieved, and tightening cost controls maintained at 75% of FY19 cost base. Flight Centre also reinstated its dividend, announcing an 18 cents per share final dividend for FY23. While travel demand remains strong now, the outlook across the industry is easing over FY24 as unprecedented demand fueled tailwinds for strong results in FY23, which may be the reason Flight Centre failed to provide any outlook for FY24. Brambles ASX BXB knocked FY23 out of the park, and investors responded accordingly on Wednesday, with the company's share price rising 7% at the closing bell. Inflationary pressures have seen some margins contract across a number of industries in FY23 results. However, for Brambles, price increases and operational efficiency have offset inflationary pressures and lower volume impacts. Volume declined 2% on FY22 due to a pallet shortage felt in the first half of FY23. However, the company still posted a revenue increased 10% to $6.0768 billion US. Underlying profit rose 19% to $1 billion US, and the company declared a final dividend of 14 US cents per share, taking the full year dividends to 26.25 US cents per share. FY24 outlook was also provided by Brambles, including the expectation of sales growth between 6 to 8% at constant currency. Underlying profit growth is expected between 9 to 12%. Positive free cash flow before dividends is expected between $450 to $550 million US, and dividend payout ratio to be consistent with the payout policy of 45 to 60% of underlying profit after finance costs and tax. The key takeaways from reporting season this week and themes that have been reiterated through investor reactions include FY24 outlook is crucial for companies to provide some certainty for investors. As we saw for the airline and travel companies that failed to provide any guidance, investors sold out. Staple stocks that were able to pass on rising costs from inflation were favoured by investors, and investors were very quick to sell out of retailers who had soft results in FY23 and maintained higher inventory levels. Locally, from Monday to Thursday, it was a very strong week on our local market, with the ASX 200 rising 2.67% as all except the energy sector posted a notable gain. The material stocks had the biggest rally, with the sector rising 3.66%, followed by the healthcare sector adding 3.36%, and consumer discretionary rose 3.18%. The winning stocks on the ASX 200 were led by Johns Lyng Group, jumping 16.09%, on the company reporting a 64% rise in profit for FY23. Silver Lake Resources rose 12.6% from Monday to Thursday, and Eagers Automotive rallied 12.12% over the 4 trading days. On the losing end, Chalice Mining tumbled 28% after updating the market on a scoping study, while Sayona Mining fell 12% and GrainCorp fell 6.5% over the week. On the broader market, the All Ords rose 2.53%, led by Healthier soaring 74% after the company received a takeover bid, while Next Ed Group rose 49% and EML Payments jumped 46%. The most traded stocks by Bell Direct clients from Monday to Thursday were BHP Group, Fortescue Metals Group, Wesfarmers, Next DC, Ramsay Healthcare, IDP Education, Paladin Energy, ResMed and Cube Holdings. Clients also bought into GUD Holdings. And the most traded ETFs were BetaShares Nasdaq 100 ETF, Vanguard Australian Shares Index ETF, and SPDR S&P ASX 200 Resources ETF. Looking to the week ahead as we wind down from reporting season and the focus shifts back to macroeconomic moves and data as a guide for market movers. The RBA will hand down the latest interest rate decision for Australia on Tuesday, with the expectation for rates to be held at 4.1% for the month ahead as the economy continues to show signs of cooling, especially through CPI easing to growth of 4.9% in data out this week. Australia's GDP growth rate data for Q2 will also be released next Wednesday, which will provide further insight into the impact of interest rates and inflation on economic growth down under. Australia's trade balance data for July is also out on Thursday, with the forecast of a decline in trade surplus to $10.5 billion from $11.321 billion in June. Overseas, US ISM Services PMI data for August is out on Thursday, with consensus expecting a slight decline to 52.6 points from 52.7 points in July. China's trade balance and inflation rate data is also out later next week, which the market will be keeping a very close eye on to determine how the world's second largest economy is recovering post-pandemic. And that's all we have time for this week. Have a wonderful Friday, a great weekend, and as always, happy investing.